All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name, as always, is JB, and today I'm going to be going over silver and my prediction back in March of 11th of 2023, and essentially how I predicted the largest move silver has had in years. So for those of you that don't know, XAGUSD is the actual symbol for silver, US dollar, and here is me calling it out in my server back in March 11th, saying that this is a great buy position for the longer term. And this image here, we're actually going to pull up, zoom into, and I will break down what I was seeing. So here we are, silver US dollar on the weekly time frame, so a very large scale here. And what we're going to be looking at is essentially what made me assume this prediction of this dotted line here, that silver would go and eventually run this target. Now, one of the first things I noticed, and I do talk about this a lot, and that is this resting liquidity, or what we also can call consolidation in the market. When there is a very slow period of price action like this, it tells me that a lot of orders are building below or above this certain area. And as we know, the majority of those orders is what is known as liquidity. And liquidity is what large-scale institutions will use to actually drive price in the direction that they want. So for example, a large institution cannot place $1 million buy order on silver if there isn't $1 million worth of sell orders in the market. So for this very, very large move to occur, institutions must find an area where a lot of sellers are involved in the market, and that is greatly shown by consolidation periods or low and slow volume in the markets. So that is why I have this labeled as resting liquidity. And as you can see, this blue box that I have marked here is a very impulsive and very strong sell order created by institutions to grab all of those sell orders that we talked about and then convert that into this very, very strong buy power that you're seeing. And what I have marked here is that high volume expansion. This is a very clear and very intentional institutional involvement in the markets. A ton of capital is necessary to create a move like this. And as you can see, this very high volume bearish move right after a very high volume bullish break of structure kind of creates a range that we can expect price to work within from this low to this high. After that occurs, the markets are going to be very low on liquidity because a lot of orders have been pushed out. So that's why you see this consolidation and very slow volume that silver had for a few years after that. And then eventually silver does begin to work its way down towards this blue area and create what's called a mitigation. Now keep in mind, we talked about consolidation back here being liquidity, and in the same way, this consolidation up here is also a large scale amount of liquidity in the markets. So when price works its way down through that liquidity, we can once again expect a bullish and strong move in the markets, coupled with this mitigation that occurred here. So mitigation is actually just a closing of orders from institutions. Now institutions don't want us to be involved in these very strong and heavy moves. So what they do is very quick and impulsive sell orders with a lot of volume before making a strong bullish move. However, if you're selling price very, very heavily starting from here, let's call it the 19 to 20 level, but then you push price very heavily down towards the $11 level, but then drive it very heavily upward towards 30, you are actually still negative on these positions that occurred here because you sold so heavily to then buy even heavier. Of course, institutions made so much more money on this up move because that is where they intended to drive price. However, they still have to come back slowly and mitigate, meaning close out those sell positions that they originally had, and they want to sell those positions off in a profit or break even. So if they initially sold at this level of roughly 19, when price is at 30, they should have to come back to that 19 level or a little bit lower so that they can actually make and close out profit on their positions. So that's what you see happening here is they drive price slowly down towards that initial sell position at 19. And then once price is at roughly the 18 level, which we can see occur here, now they can close out that position in a profit because they sold at 19 and now they're closing it out much, much later, but at that level of 18. And once they close that position in a profit, no more orders are left behind, so they're able to go and drive price towards the all-time high. All of this coupled with more liquidity internal to the range, as well as the structural range I talked about from this low to this high. We have a great demand zone, a great shift in structure on the lower time frame, and with all of that combined, I was able to make this prediction to my server and tell them that I think a great long-term buy position is available. Now, a few months after that, we're now at June 30th in 2023. I had a student ask me, JB, do you have any updates on metals? So once again, I went to follow up with my silver analysis. You can see that demand zone that I pointed out. We had a very, very strong bullish reaction already. a lot of money was to be made on this move. I believe overall it's roughly a 3 to 5% move here that occurred, which is already substantial. But they asked me for an update on silver. And just to show that I didn't get lucky the first time, I made a second piece of analysis here. And obviously another student jokingly saying he's putting his life savings on it. But we will go take a look at that image there. So very similar to the one we saw before, this is actually all of the pieces that we just looked at: the liquidity taken, the mitigation, the small break of structure, the demand zone. So after price then broke another structural high, in line with that expectation from the previous image of taking this target, I had the expectation that price would slowly make its way back down, fill this fair value gap, mitigate this demand zone here, which is shown by this very bearish bottom candle, stay within this dotted protected line is what I call it. You might hear it called a strong low on YouTube, and then run this target and eventually that overall target at the high. So this once again was my analysis that I sent out on June 30th to my server, and this is still the weekly time frame of silver. And now we're going to take a look at live price action and see how all of this panned out. So once again, the first image we had was my initial drawing with this dotted line. I expected price to move from this demand to the overall high. However, you can actually see here, this is that second analysis that I submit to them. So if they missed the first move, I didn't leave them hanging. I actually gave them a great entry for this second move here at this demand zone. And if you want, we can pull up the images side by side, if I can. Here we go. So let me zoom in a little bit here and zoom in maybe a little bit here as well. Let's go like this. Then let me pull that back up. So as you can see here, we're looking at the same piece of price action. We have this small break of structure right here. We have the demand zone. I have it drawn a little bit wider on this image. We can go right back and draw it based on how the other image was drawn. Just essentially following this candle here. We tap into it. We had the very bullish move here on both examples, and then we had the target high here. So I mentioned price was going to come back down and fill this fair value gap, tap into this bearish candle, this very last bearish candle, and then run the overall high. And as you can see, perfectly as expected, there was another great entry that was given 2 times in a row on silver. Now, for anyone in my server that was able to take these callouts or take the positions, Yubs, for example, jokingly saying he's putting his life savings on, he would have made a killing. We are now at that target high overall. Actually, the highest point that silver has reached in a decade. But overall, I just wanted to show you guys, number one, you know, these types of callouts are given all the time in our server. I love having a long-term perspective on investments. Not only just day trading or swing trading like I do, but I love looking at a higher time frame and making a long-term expectation on commodities or even just the overall stock market. But number two, mostly just showing you the fractal nature of these markets and that the same concepts I use on my 4-hour trading strategy can be applied to a weekly time frame and very accurately assume where price is most likely to go next. So this was my analysis on silver. I might even make a follow-up video on gold where I did the same exact thing, but actually even older. I believe the gold analysis I sent out to my server was maybe 2 years ago, if not nearing 3 years ago now. And very similar, I'll actually have an old clip to play for that one. It was in my old course content. But if you guys are interested in joining the community for callouts like these, or even joining just for course content and learning these concepts I'm using here, feel free to check the link in the description. You can sign up on our website. We also offer a free strategy on the website as well if that's something you're interested in. But that is going to be all for today's video. I hope you guys appreciated this analysis and learned something from this video. And if you did, please drop a like. Thank you all for watching, and I will see you guys in next week's video.